Hey guys, I put some content out yesterday about this story. ANZ CEO suggests 50-year mortgages might be the go. In case you don't know, normally it's 30 years, and that actually got extended a little while back from 20-year mortgages. All of this is really timely because I put out another video on my YouTube community, and the video was more to pose a question, are we debt slaves? And the whole premise was in Melbourne, first home buyer, 35, 36 years old. 30-year mortgage means you're 65, 66 by the time you retire, by the time you finish the loan, and then you've got to figure out, well, how do I save for retirement? It's kind of interesting that when I got started in finance, people were talking about retiring in their 50s and living the life they want. And now it's really just a pipe dream. So now we've got something here from Yahoo Finance. Let's dig into it. So we see here on the first line, ANZ's bosses floated the idea of giving Aussie home buyers longer mortgages as a way of getting them into the market without crippling them financially. Being 50 years in debt sounds like being crippled financially to me. According to the Herald Sun, the banking chief said there's technically no law stopping lenders from signing people up to 40 or even 50-year mortgages. But Rate City's research director, Sally Tyndall, told Yahoo Finance that locking someone into a home loan for more than half of someone's life could be problematic. Oh, really? You think so? I want to touch on something here, and I touch on it a lot. So sorry if you follow me or any of my kind of socials. The problem is here that you get similar results to what we've got already. And this is the problem, and we're starting to see in the everything crisis, which is another term I've made up. I'm sure you understand what it means every time you turn on the TV, every week. It's a different type of crisis. Basically, the same level of thinking, the same power structures, the same politicians, whatever decisions they make, they're going to get the same sort of results because they're thinking in the same way. I don't see how it doesn't make sense, but unfortunately, in the world we live in, if you come in with different ideas and different thoughts, you get shot down really quick. So something like this actually doesn't surprise me, even though it kind of disgusts me in a way. It doesn't surprise me. I'll be more specific. The thing is that this is going to drive up borrowing power, which is going to push the property market even further. So you've got things like, let's say you do a 50-year mortgage. Well, that's, what is that? 66% longer in debt, which means the repayments a lot lower, which means the borrowing power is a lot higher. So we should have learnt this playbook from the last 25 years that people that have higher borrowing powers can now go out and buy more or pay more for property. And unfortunately, that's the nature of the beast. What's really concerning to me is that these ideas are ramping up. I've talked about Liberals' Super for Housing scheme, the proposed scheme, and the proposed Help to Buy scheme on Labor's side. And let's take the Help to Buy scheme, for example, because I've done more work on that. If that comes in, that's basically the federal government saying, hey, we're going to create this money out of thin air because our federal government's really in surplus. So they're going to print this money out of thin air and they're going to put it into the property market because that's basically what it is. So if my borrowing capacity is 500,000 from memory, that means it's an $833,000 purchase, or maybe it's 866,000 when the government's chipping in 40%. All of this money flows into the property market. The problem I have with it though is they have to go to a larger extent to keep propping these things up. The way I look at it, I'm no expert with how societies work, but society should work where the workers, the little guy on the bottom, has enough incentive to basically work hard, to be good little producers. The problem is that when the government give us stimulus or handouts or they're printing money to do something, they need to give us more incentive, which means they need to go to bigger lengths. And this is the whole insidious problem with this, is that whenever you create more money, whether you give that to people on New Start, for example, or pensioners, or you give it to first home buyers, or you give it to anyone, it doesn't matter. If you're creating more money in the economy, what you're doing is you're creating inflation. And if your problem to fight that is creating more money, which basically a 50-year loan is going to do that. For those people who aren't aware, when a loan is created, it's safe to make the assumption that money is created and then it's put into the economy. When the loan is paid back, well, then the money is taken out of the economy. I know that's not exactly right, but it's a nice, easy assumption. So if people are borrowing 66% more, if the government's going to pitch in 40% on top for a property, it's just going to create worse inflation. Actually, what's been happening over a long period of time is wages has not been rising at the same rate as the cost of everything, not just property, everything. Property, shares, cost of living, everyone can feel the crush. Another term I'm using at the moment, everyone can feel the crush of living in present day Melbourne, where I'm from. But from all accounts, I'm hearing this from all parts of the country. They've used a good example here to kind of quantify it in another way. So they've said if you take a 40-year mortgage out, that's not even a 50-year mortgage, it's a 40-year mortgage on a $400,000 loan amount, which is actually quite small for these days. You're basically paying an extra 115 grand on interest over the lifetime of the loan. So it's going to be a lot higher because you're in debt for a lot longer on a 50-year loan. And the average interest rate is probably closer to 5% if you look back hundreds of years. CEO trying to sell that this is going to be a good outcome for borrowers. Let's just call it for what it is. He's trying to sell more loans, so his business is more profitable. We understand that he has a job to do, but to sell it as it's going to be a benefit for home buyers, I mean, it's a bit silly. Come on, guys. So he goes on to say here that it's not a silver bullet. So he's probably creating a bit of a caveat to what he's saying, and that's probably so he doesn't get laughed out of the room, so to speak, even though I'm assuming there's a lot of other people in the media doing exactly that. He's also gone on to mention that the banking industry could do other things to ease the burden for borrowers. So one would be cutting the 3% buffer added to mortgage applications in case interest rate rise. This is something that APRA kind of enforces. So it's a fail-safe. So right now, the average rate is 6.29%, for example. When the bank figures out how much you can borrow, they look at your income and your expenses, and they look at how much the loan's going to cost. When they figure out how much the loan's going to cost, they're adding 3% on. And the reason they do that is that if there is an interest rate rise, it kind of gives a buffer for people to be able to deal with it. And that's why now, if you look from the rate rises from 1.89 to 6.29 now, they happened all in about 18 months. And actually, if you look at the default rate on loans, people have been able to cushion that really well. So in terms of regulatory presence, it's there for a reason. I have a nuanced view to it that I have on both sides, which maybe I'll explain on another video. For me, cutting the rate buffers would mean something on the other side. It's a trade-off, and what that would mean is higher risk. He's also gone on to mention, again, cutting the mortgage insurance. Well, the insurance is there for a reason. So the banks are paying for insurance to cover risky lending. So risky lending is when the banks have to lend a high amount of the property that they're holding. So for example, if they're holding a property for $1 million, if they need to fund 90% of that, 900 grand, that's risky, because what if the property market drops a little bit and there's lawyers' fees involved and they have to sell the property, then potentially they can lose money. That's why they tag out insurance. So what he's proposing again is a trade-off between an opportunity and risk. So to me personally, it feels like a bit of pulling at straws there. The only other thing I want to say is I feel like younger millennials, believe it or not, I'm a millennial. I'm going bald, but I'm a millennial. Younger millennials get forgotten in all of this talk. This is the thing that worries me, is if you don't give people enough incentive, if people think the jig is up, and I know a lot of people think this because go to my YouTube comments and you'll see that, then my fear is that things really start falling apart socially. So if you get more people that aren't focused on being good little workers, well, they're going to do other things. I know young men, for example, are going to do drugs. Young men with a lot of time probably isn't a good thing. So you're going to have mental and emotional tolls from this. You're going to have more people taking drugs. You're going to have a more dangerous society to live in. And this is the thing that I guess older Australians are potentially a bit blind to, if I could be direct. It's that it's not about, oh, rates were higher when we were older, and younger people would say, oh, the boomers have all of our wealth and we can't afford any. It's the fact that these guys are losing hope, and people think they're not financially affected by any of this, especially if they've owned homes for over 10 years. But they are, because the thing is your kids have to go out in this society. You have to go out in this society. And if the place is becoming increasingly more dangerous, then clearly that's not a good thing. At the end of the day, I want to go back to what I said earlier, and that is that we need to change. And unfortunately, I think we're going to change when shit really hits the fan, if you want me to be frank. So these sort of approaches, these sort of ideas, they're going to increase. And I'll say the same thing that I always say, and that is that you got to make a plan. Relying on government to help you, I would argue, has got its risks. And I'll go back to the inflation point I made before is that, you get a handout from the government, but that handout you're paying for in the future in the form of inflation. So that's sort of when the penny drops. That is hard for people to deal with because generally when the penny drops, it's quite often too late for people. And honestly, that's what I see as a mortgage broker. When people come to me, they try and re-leverage, trying to re-risk to access that other side of the coin, to access that opportunity. They'll take too much risk. And that's my fear that people are going to get put in a worse position. So I'll spell that out a bit more. Opportunity and risk are two sides of the same coin. If people are living too easy because they think the government's got their back somehow, they quite often get to a point where it's too late and they've got a bit of clarity and they realize, shit, I'm in trouble. Quite often what they do is they come to the broker, try to borrow money to speculate on a property to get capital gain. And I'm not saying you can't achieve that. I'm not saying those, I've definitely seen all sorts of stuff in my career as a broker. But what I'm saying is you're increasing your risk and actually with the risk, you're increasing your probability that you won't achieve what you want to achieve anyway. That's just an opinion, not financial advice. I always say seek out financial advice. I hope that helps. I want to hear your comments, guys, because this sort of crazy stuff is going to keep continuing. And I've been doing video content for well over 2 years now. And since 2022, what I've been saying is the only thing that's certain is uncertainty. And this sort of stuff is going to keep going on. So I want to hear genuinely what your concerns are. Maybe you're not concerned. Maybe you disagree with me completely. That's cool. I want to hear from you. Cheers.